Welcome to Inside Startup Investing, the only podcast where you can invest in every guest. Today, I am sitting down with Chris Graebe, a leading investor and financial correspondent in the digital private market ecosystem. Chris Graebe likely has one of the largest investor followings in our industry, with people following his strategy that has led to several recent exits, aka liquidity, for those following his investment strategy. I have a lot of respect for Chris because he and I have both been in the industry since nearly the beginning, and we really care about the same things, empowering investors with the tools they need to invest confidently in private equity. But this episode is all about discussing exits, liquidity, and the good, the great, and the ugly of our industry that we still need to figure out to enable more and better exits for investors. But I have to say, certainly the proof is in the pudding, and I really have to hand it to Chris for some of the deals he has brought to his audience over the years, most notably for me, BeatBox. I actually helped Chris with the due diligence of BeatBox back in 2021 and walked away lukewarm on the opportunity. This cocktail in a box beverage company just felt like another name in a crowded space. But they proved me and all the naysayers wrong. After raising a small 700K round with Chris Graebe's blessing in 2022 on WeFunder, they recently were acquired by Anheuser-Busch. Yes, one of the largest alcohol beverage producers in the world, for hundreds of millions of dollars, yielding real returns for investors in fairly short order. It's one of the great stories for our industry that has also seen IPOs hit the market, a couple of which Chris has been involved in, that saw major spikes, and others that are now finding their way in a challenging public market ecosystem. If you want to understand more about how industry insiders are thinking about driving near and long-term liquidity for investors, identifying real exit potential for investors, and how you can follow along with Chris as he continues to be a proponent of diversifying into private equity, this is a must listen. Chris is a wealth of knowledge. So with that, let's get on to the show and welcome Chris. My good friend Chris, thanks for being here.
Absolutely, man. Honored to be here.
Look, in addition to sharing a wonderful name, there's few people who kind of know what it is to be on the investment research side of the equity crowdfunding industry. There's like pretty much outside of my team, almost no one that's been doing it from the start. So you're pretty much my guy when I just want to catch up with someone who can empathize with the challenge, the excitement, the ups, the downs of being in this industry, building in this industry, and doing what it is that we do. So thank you for being here.
Yeah, man. Honored to be here today, man. Excited to have this chat.
So, a lot of different people have come and gone in our industry over the years. You and I have known many of them and seen many of them go by the wayside. And you've been here from nearly the beginning, recommending deals. I've always thought your model was really cool. I've never been concerned about us being competitive in that some people just want to follow a strategy. They want to follow Chris Graebe and his strategy to investing in startups and private companies. And I think that's really cool. I really respect that model. And I think you've done a tremendous job of building your brand as a trusted source of just finding good deals that you're really into, doing the work on them and recommending them to your customers. And that's awesome. You've had some good success. You found some really interesting winners along the way. So I wanted to have this conversation with you today because one of the things that we need in this industry is the ability to talk about more exits and things going on. And look, we all know that this is a very long investment cycle, but as much as we tell ourselves that, investors still don't fully understand the magnitude of what long means, and they still want to see movement in the market and things going on. So first off, just talk to us a little bit about your investment strategy, the things you look for, and then we'll eventually get into some of the exits that you've actually had along the way already.
Yeah, no, thanks for having me, brother. I'm excited to be here. And, for everybody listening here, they are true heroes, trying to understand how this world works. And I'd say still early adopters because many people don't even know this whole exciting world exists. But yeah, I jumped into about 2019 and was like, hey, I think this is going to be a thing. The rules had been out for about, everything had been passed for about 3 years or so. And so I was like, all right, let me dive in here, and just kind of was feeling my way around in the dark. Didn't really fully know what I was doing, but I had some mentors that were kind of helping guide me. And then I just started. And so here I am. We're 2026 as we record this right now. I've invested in just over 35 deals or so. And they're well worth more than $1 billion in total combined valuations. And we've had some exits, and we can talk about that. For me, people always ask, like, is there a particular sector that you get excited about, or one that you are, you're mainly focused on? I said, no, like, I just want to find great founders doing great things in companies that I can understand and that look like they have kind of a great opportunity to scale and a long-term strategy. And so that's kind of the way I look at it. And so I've got some kind of general criteria I look at to get the conversation started. I have analysts on my side who will dive deep into the numbers and do all that, create reports and stuff. And it's really neat to see, our members kind of dive into deals right alongside us, and at times see $5 million deals filled up in a few days, and 3 million and 4 million. And it's, and then Reg A's that are going to 30 or 40 million. So it's been a really, really exciting time. And then you're right. Patience is one of those games that we all realize, like, how patient are we really? And, turns out we're not as patient as we think we are or can be. But the good news is we've seen some liquidity events here recently, which obviously gets everybody excited and jacked up.
Absolutely. It's funny. It was at one of the last gigs that you had when you were recommending deals. You had actually brought us in to look at a deal called BeatBox and do the diligence on it. And we wrote up a fairly long diligence report, and it was just a thing we were trying. Honestly, it's the only one I think we ever did, like this, like outside before a company goes live, let's do a deep dive on a company for someone who's going to recommend a deal. It was a unique model, but we did it. And it's funny because I remember doing the workup on BeatBox, and you could tell us more about what it actually is. And I thought it was like interesting, but I was kind of like, I don't know. I don't get it. Like, it's not something that like I would drink. Like, I don't know. I just wasn't that excited by it. I thought it was a perfectly fine company. Just wasn't excited. And yet it's had a really exciting outcome. So talk to us about what BeatBox is, what you saw in it, and the recent exit that's come about.
Yeah. So for people who say, I mean, have I heard that word before? You probably have, because BeatBox was a company that was featured on Shark Tank many, many years ago. And Mr. Mark Cuban invested in them. He put about $1 million in. Now, it was three scrappy young founders who came out of the University of Texas in Austin, and they started this kind of party punch alcohol-based drink. It was kind of a new idea, new concept. They were, really in the early stages when Cuban invested in them. And then we ended up meeting them, and it was 2020 when you did that report for us, and they were doing around $7 million in revenue and had basically survived a death rattle like multiple times. And so probably why you weren't as excited about it. You're like, the beverage space is so hard. It's virtually impossible, And so for anybody watching, it goes like, how does this happen? Well, like, the big conglomerates are willing to let all of these companies come and go. And then when they survive and they succeed, well, then they'll decide to scoop them up because they go, okay, there's something here and we can now take it and scale it. And so they were doing $7 million in revenue, and they were still just in the, are we going to make it or are we not going to make it phase? And we said, okay, well, let's dive in. And you did the analysis. We liked what we saw, and it was like, okay, let's take a ride on these. And these three scrappy founders, and the founders were really the ones that I was like, I think they're going to figure this out. They're just, sometimes you got to be young enough. Sometimes these guys are young enough and sometimes crazy enough to think it's possible. A lot of the ones that succeed, like me and all of us who are still here, are just crazy enough to believe this is possible. And that they had that edge. And there were some other competitive advantages that I saw in there. But really, in any kind of investing, especially in the world of startups and private companies, it's all such a big risk. But long story short, here we are, 2026. At the end of the year, they announced they were in conversations with Anheuser-Busch. The top of the year comes, they close out, and they sell 85% of their company to Anheuser-Busch for $490 million. So there's still 15% ownership of anybody who was in that deal. But, we saw a few thousand retail investors jump into this deal back in 2020, and they just saw a very real exit with potential upside for even more, because once Anheuser-Busch gets a hold of it and they start to scale and there's kind of an earn-out situation happening there could be more money coming. So it's sitting somewhere around at the 85% mark at the $490 million valuation. And you're looking at around a 4.5 to 5x, depending on on when you invested in the round. And yeah, I mean, it's a big win for people. I mean, if you want to see like the S&P in that same period of time, I believe is just over 2x. So, those investors, if you put 10 grand into the S&P or 10 grand into BeatBox, you would have saw at least a double, if not, a triple compared to what was happening there.
I mean, shoot, if you, have put in 10 grand and you're walking away with 45, 50 grand, I think you'd be pretty, I'd be certainly very happy. That's awesome.
Yep. Yeah.
But it's funny because it occurred and like, I'm in this world, we track these things, we go after these things. And like, I kind of heard about it, but it was like quiet. There was like a press release. Like it was like a mention. No one's like shouting it from there. I still hear more about Liquid Death that hasn't exited and everyone's talking about them. Meanwhile, it's like, wait, BeatBox just sold for $500 million with upside for it to be worth closer to 600 or 700 million. And we're not talking about it. And this was backed by crowdfunding investors. Like that's a phenomenal story. And I don't think anyone would be upset by holding on to something for a few years and getting out with a 4.5 to 5x. That's awesome.
I'm not in the data business like you, but I believe it's the biggest exit WeFunders ever had. That's so awesome. Outside of a Reg D, I think there may have been a Reg D that did, but for Reg CF, I mean, here's the craziest part, man. Like the cap was $1,070,000 when these guys raised. It wasn't even five. You couldn't even raise the 1.2 on reviewed financials or the 5 million. It was $1,070,000. And so, and you talk about early adopters. Those are some early adopters who were like, yeah, we'll take a ride on this. But yeah, I don't understand it. For me personally, I'm going, this is a massive deal. And I think we should be shouting it from the rooftops. And so I am. I don't know why others aren't. And maybe it's because of, if we look at percentage-wise of how many companies have entered the Reg CF world and how many have not exited, maybe there's a little bit of like gun shy to celebrate the one. But I think it's a big win. And obviously I'm celebrating because I got a check. And anybody else who invested alongside me got a check.
You bring up a great point, and I'll just tell you, I talked to all of the insiders, all the people working in the industry. I'm trying to figure this out myself, and there's this weird, almost like scared perception from, people who work where these deals went down, where they're like, we're not sure we should be sharing this information. I'm like, what do you mean? Like, this was done in public. There are press releases about the deal being done. I know it's a public company that acquired them, but I just think it's so important for investors to be like, this was awesome. This is a really good outcome. And it makes me sad that it isn't spoken about more, but it also makes me realize, Chris, this is why we're having this podcast today. We need to have the BeatBox guys on and do a live webinar talking about the exit. Invite all your investors. We gotta champion it. If no one else is going to, sure. I think we have to. First off, not to build up your ego, but kudos to you on picking them because, again, thanks. To your point, we have seen so many CPGs go out of business that have tried, right? Yeah. And there's something about getting, I think, past like the 10 million annual revenue territory, where like you start to get some of that scale. But I mean, we've seen so many fall by the wayside over the years. So to pick the one that actually made it is quite impressive. Now, let's talk about some of the other companies that, again, you've recommended where you're like, hey, I think this is a deal that's going to do really well, that have actually gone on to IPO. Let's talk about that as well.
Yeah, I'm in this interesting string of wins on the board, and I'm very grateful for it. And I know everybody who invested alongside of me is grateful for it. First one is a company called their ticker symbol is FJET, and they are Starfighters space. And so these guys, I found them and got to visit their headquarters about 2 years ago, 1.5 to 2 years ago. And I thought, man, this is going to be interesting. And I kind of knew that they had their eye on going public. And so it's like, okay. And it was a really interesting play because now this happened a few times, but they were going to go Reg A. So they were going to go raise up to $30 million, 35, I think what it was. And then what happens is Newsmax went and did a Reg A to an IPO. And I think they were like, wait a second, are we allowed to do this? Is this a thing? And so right in the middle of their raise, they pivoted, did some reworking on their filings, and ultimately said, we're going to go Reg A to an IPO. And I was like, wow, this could be interesting. Yeah. So they IPO in December, and it was a really neat, kind of the part that's so cool that nobody really talks about right now is that a lot of these companies, when they want to go public, they have a certain requirement of the number of shareholders that they have to have on a cap table.
Right.
And so, you know, even if you go raise from 3,000 people on a WeFunder or a Start Engine, typically it's in an SPV, right? Special purpose acquisition, you know, vehicle there. And so, well, that's a SPAC. So, you know, special purpose vehicle. So where like basically like only one line is on the cap table. So for these requirements for the NASDAQ or the New York Stock Exchange, you have to have a certain number of shareholders that own a percentage of your company. And so these guys were like, oh, if you do this, then nobody's locked up, and then we could use these names and these people could get their shares immediately. So the company went public on December 18th and people were transferring shares into their account. I literally had mine 2 days later. Like 2 days later, it was in my account and I was not locked up at all. There was no lockup period. And so we were free and able to trade. Now, the craziest thing about that stock is on day 3 of trading, it went to $31.50. Now, the price that we invested in was at like $3.49 a share. And it just skyrocketed. And, you know, some people, you know, their brokerage accounts didn't get the share. People were like, I need the shares in my account. And, you know, that's if you're wanting to sell. If people say, hey, you know, I believe in the thing long term and I want to take it to the. So that was really cool. I had members writing me going, Chris, I got a 6X, a 7X, an 8X. You know, it was just like, it was amazing. It was amazing to be a part of that and to see and to, you know, just watch the journey of a stock. And then you go, okay, let's see what they do long haul. So that's FJet. Starfighters. I don't know if you have any questions on that, and I can share about the second one here in a second.
Yeah, well, a couple things on there that I think are interesting and worth hitting on. First off, it is really cool. People ask all the time, are IPOs occurring? The answer is yes. I think there's been over 40 IPOs. We do have the data on that and are tracking them. Now, one of the challenges with IPO, there's multitudes of challenges with IPOs. First off, when you hear things like lockup, right? Like, when a company goes public, you're holding these shares, right? And quite literally, I want to talk about the mechanics of this because it matters.
Yeah, sure.
You're holding these shares in the private markets on like a cap table. Oftentimes it could be in like an Excel sheet, right? Or it's with the Start Engine or WeFund or wherever. But now we got to get away for those shares that like technically you can trade. We got to get them from like living on a piece of paper to like being living, breathing in the market. And the only way for them to be living, breathing in the market is to use a transfer agent, which is quite literally, let's transfer it from wherever it is offline so that it's online and available in your brokerage account. And let's get it into whether you use Robinhood, SoFi, Charles Schwab. We got to get it there. And once it's there, then it's available for you to take action, to sell it, to hold it for whatever period of time you want, so on and so forth. Right. But until you get it there, you can't do anything. So like if it IPOs and your shares haven't been quite literally transferred into your brokerage account, you're kind of out of luck if you're trying to sell. You just have to wait until they're transferred. So when a company goes public, if you haven't already heard from that company that you're invested in, the first thing you have to reach out to their team and say, I want to transfer my shares. Who is a transfer agent and how did I get them into my brokerage account? And then you got to go through that process. So this is just the mechanics and the reality of when a company goes public. The other challenge is with no lockups, a lot of times we can see this surge in price and then a major fall off in the price afterwards. Because these aren't mega IPOs, right? We're not talking about tens of billions of dollars, the Ubers and the Facebooks of the world. We're talking about, you know, ones worth 50, 100, $200 million. And they're a lot more volatile where they go up and they go down. So talk to me a little bit about your experience with, you know, volatility of these companies going public and just some of your thoughts around that.
Yeah, all good insights there. You're right. I mean, you know, I would say you want to have a process when it comes to the transfer agent, your brokerage account. Make sure you understand how it works. Like I spoke to my broker a couple of days, like a week prior. I was like, all right, this is coming. I want to understand where's the buttons. What do I click? What am I dropping in? Okay, what kind of number do you need? A QSIP number? Okay, I got it. You know, it's just all kinds of stuff like that. So, but you know, you always walk through the first time, and then the second one was better. And so, yeah, I think what we're trying to track right now, because this whole Reg A to IPO thing is so new, I think a lot of the bigger players in the space may go like, you know what, I think I want to go this route. So there's some rumblings in the pipeline that there's going to be even more of these happening. So we're trying to watch the data to go, okay, is there a trend here? Like, is there like almost a pattern over the first 6 months of these deals? You can go like, okay, cool. There's a big spike on the few days. Okay. Or there's a drop. And then, okay, then 2 weeks later, there's going to be a run or whatever. And so we're still watching the patterns of it all, but yeah, it definitely can be volatile. And so one of the things I try to, explain to my members in my community is like, hey, look, it also kind of depends on the type of company that they are. Like if we know that this is a long hold company, then like we just got to let it play out. And all they have to do is just start hitting numbers and hitting revenue or whatever. Then it's like, cool. Now, if you go, all right, cool, I want to hold long, but like I at least want to get my initial investment out when it runs up. If you have the shares in your account, you're like, cool, I got my initial money back, and now I'm kind of playing with house money at this point. Yep. And so I know a lot of our people did that. And some people go, look, I don't want to ride this for the long haul. Like I saw my day, I got my 4X or my 5X, and I did it in a year and a half. I mean, like that's the craziest thing. I had somebody go, Chris, I saw your recommendation. I saw that you highlighted this deal. I invested in August. The offering closed down, I think, in September, and they went public in December, and I got a 7X. I'm like,
that's awesome.
Well, good for you. That's amazing. And that's not normal life. That's, but it happened for them. And so I think everybody has to understand that what they want from their portfolio, what they're trying to manage in their portfolio, and understanding that what kind of stock is it? Is it a biotech stock that's got to get through a phase? And once they get through the phase, they'll go public, and maybe they're going to exit for $1 billion or $2 billion after phase 1 or phase 2, so then you go, cool, maybe that's a more of a longer hold than a sell on the front end. And, so it just kind of depends on the type of stock, the type of industry, and the strategy that makes the most sense for that particular deal.
Let's talk about your other IPO. Would love to hear about it. And then I have a couple other thoughts that I want to dive in on with you.
Yeah, the other IPO was a company called Eagle Nuclear Energy, and they own the largest known uranium deposit in the United States. They're right on the Oregon-Nevada border. Like all of my deals that I select, that I invest in, I fly to them, I shoot content, I meet the team. So I drove to the middle of nowhere and stood on a massive uranium field. Like, it looked like a field, but underneath the ground, it was like 50 million pounds of uranium. So it was really cool. And then the deal goes, and this was a CF. So this was a CF. This is a rig CF. There's a $5 million cap on their raise. And they kind of had their eyes on going public, but they just didn't really know how it was going to happen. But the day their offering launched, I mean, President Trump signed into something about rare minerals, and and uranium was one of them. And just was the timing of it was wild. So the offering closed $5 million, and a lot of my members got into it. It closed like $5 million in like 6 days or 7 days. It was wild how fast it went. Then it's like, okay, cool. Offering's closed. Everybody gets in. And then a SPAC approaches them and was like, hey, like we're really interested in you guys. Could we do some kind of business combination situation? And they did. They worked it out. And again, like because of the SPAC, it was under a year that it had gone public. It went public on February 25th of this year under the ticker symbol NUCL. And they did through the SPAC. And so, SPACs are wild rides, and people have to just kind of buckle up and hang on for that. And things got pretty dicey there for a while. The stock kind of dropped, and it ended up in like the 4s, 5s. But here's the craziest thing. When the SPAC and all the stock kind of flushed out, people still got in at $3.60 a share. And so even at $4.50, they're still in the black. But these last couple of weeks or last couple of days, I mean, the stock is up it was up like 23% yesterday, and it was up like 11% the day before. So the stock is sitting at around, when I checked, it was around $12 right now. You're seeing 3X plus or whatever, and so it's it's good. It's good times. And then again, this is like, well, they need to do the digging. They need to get the it's a long game for this stock as well, but yeah, we're seeing some success and some growth there.
There's a really basic piece of all of this, right? Which is the investors now have liquidity. Above all else, like 100%. They can get out if they want. Gain, no gain, like they could still have liquidity. Again, I think it's so important for people to take multiple different strategies when they're investing, and listen to all the people they can listen to, and educate themselves from all the people they can educate themselves. So I think it's great if folks want to come and learn and follow your strategy. But one of the things I wanted to just dive in slightly more before we get into where they can go and what they can do, you're very intentional with the deals you're taking. It's not like by chance these companies IPO'd in a very short period of time. Like, when you're thinking about the companies you want to recommend, you're looking for multiple different strategies, long holds, shorter term holds.
Yes.
But you are, talking to these folks and understanding what their intentions are and how they're thinking about growing and exiting the business. So yeah, when you're thinking about your overall portfolio, how do you think about that blend of like near-term IPOs versus ones where you're just going for the long haul? So people kind of know what your strategy is.
Yeah, for me, I mean, I'm not mad at a 3x, 2x, 5, 6x. Those are all great. I think we all want to be in the deal that changes everything, right? Everybody wants to find that deal. And so for me, I'm always kind of trying to balance my personal portfolio with that to go, okay, this one is going to be a longer ride, but if it goes, like, it could literally be the deal that changes everything. And I think that's the desire of everyone watching here. But what I try to do is go like, okay, no, this one's a solid deal, and it's going to be my guess is it'll be a 4x, and that's great. And will it be a 4x in 10 years? I don't think so. I think it'll be a sooner deal. If it's like, okay, this one's a longer hold, but it has the potential to be 30, 40, 100, 1,000x, then like, so I try to really balance that out. But yeah, I'm very, very intentional with what I bring to the table. And for me, look, I'm investing my personal money. And so like, I want great deals. And so I'm really, really intentional to ask about the exit strategy on paper that they have, because we all know things change and pivot, and acquisitions can come and offers and IPOs, so all that can come. But I work really hard to try and understand the game of the founders and what they're trying to think about when it comes to the end game and the exit.
That's cool. I love it. Well, listen, I have a lot of respect for what you've built. You've been in the market for many, many years. You've built up kind of a trusted brand as being someone who's trying to build an intentional portfolio in this market, which I really appreciate. And you've driven to exits, which is phenomenal. And we need more of those stories to be told. So I'm glad we get to tell those here today. Yeah. If people want to follow your strategy, where can they go? What can they do?
Yeah, if they go to IPODealHunter.com, just IPODealHunter.com, you can learn some more about what I do. I think I've got some free resources on there that they can check out as well. Yeah, that's kind of where you can follow me.
Awesome. Chris, thank you as always for your time and insights. Appreciate the conversation, and have a wonderful day.
Thanks, brother.
If you like what you heard on the show today, you can learn more about Chris Graebe's investment strategy at dealdigger.co. And as always, if you like what you heard on the show today, please like, subscribe, and share our podcast wherever you listen so more investors like you can find us. Thanks for tuning in, and happy investing.